Okay, there we go. Now we're streaming. Sweet. Cool. All right, here we go. Hey guys, getting started for a nice midday lull session. Hey Audie, thanks for checking in. Hey guys. All right, we're in. How's everybody doing? It has been a minute. It has been a minute since I've been on camera. You know, figuratively speaking. How y'all doing? Let's go check in on our market plays. It's been a minute since I've been in here. Y'all are gonna have to excuse me while I catch up to everything. I've been hearing whisperings that the market's going to crash. I don't know what you guys think. Some tinfoil hat wearing nutcase drew this on my charts. Wondering what y'all think of it. Avas. Thanks, dude. Switzerland. I need to visit that country. I need to go tour Europe. I want to go see Europe so bad. I would love to go and see Switzerland. See the Alps and stuff. I only get to see it through movies. Fear no evil. Dude, I'm I'm not pumping anything, dude. I just talk about what's going on, all right? I focus on technicals. So you know what? Just to spite you, I am going to talk about Mullen. I heard the news that their new polymer battery had some excellent performance stats, which is awesome. It is fantastic. So the new solid state battery test results surpassed expectation, which is a fantastic revelation of news. I'm not that deep into battery tech, but I understand at least a little bit of it. So the battery was rated at 300 ampere hours for 3.7 volts, and the battery actually outperformed by 43 ampere hours. So that's actually not too bad. So this would be for a single cell battery. So I'm assuming that they're going to make that's just for like one cell, because like by itself 30 ampere hours for that voltage wouldn't be that much. It wouldn't get you that far. But I assume that like that's since that's given that that's just one cell, you could have. I wish I had caught. Was it Tony Smith that was mentioning his experience with battery tech? Oh, he's not in here. Well, in any case, I was learning a little bit about this from Tony Smith, so I did appreciate the insight that he gave into the battery tech. But anyway, let's go and check out a few technicals on Mullen and go see what it's doing, at least on the daily chart to start with, because this is actually a good setup. I'm really liking the setup. So here we have a bottom here, and this was where Mullen had hit its lowest point, and we also have a bottom here. Now I suspect if I go to a weekly time frame, this is going to turn out to look like a double bottom. And as it turns out, it does. So we've got this deep red candle, this deep red body candle, which would be this would be the bottom zone of a double bottom, and then the support below it is the wick down here of the next candle that touches a little bit lower. And the idea of a double bottom is that the double bottom is a pattern where a stock touches those lines of support but does not cross the second time. So the close of the candle's body is the top and the wick down is the bottom. So as long as the candle, this candle in particular, enters into this zone but never closes down here, it must enter this zone. It can enter and close in this zone, but it must not close down here in order for it to be a double bottom. So we can see that it actually got rejected very harshly once it wicked down into this area of support, and Mullen has consolidated and made a jump thanks to this news. So a nice catalyst to complete a double bottom pattern. And if that is the case, then we need to go and find our resistance. And we can safely say that the resistance begins here, maybe goes about as far as $4.20, but this is where the resistance of this candle, these two candles and their wicks, are here at the top. And then we tested them again here in March when Mullen started to squeeze from our earlier prediction. So this is where we would expect Mullen to eventually get to. It's a bit of a tall order to expect it to get there by this Friday or even this month, but the completion of a double bottom would actually indicate that Mullen will eventually make its way back up here above 350. And if it can break out through that zone and this zone, then Mullen could keep going. But we would need to give it a lot of time. Okay, so fear no evil. Dude, I don't know how else to say this, my dude, but I had a life, okay? And I had some shit going on in my life that I had to go and deal with, all right? And I'm not here to I'm not here to pump up any stock. I go and find opportunities, I talk about them, and I give people my opinion. And that's going to be how I treat every single stock. Yes, I believe that Mullen was manipulated, and yes, I think that the market makers got screwed on the deal. And I think that we did win, but it moved back down. And you know what? I'm going to acknowledge the reality that once Mullen had hit the top at $4, it got rejected and it went back into a downtrend. That's just how the charts worked out, all right? Now, whatever reasons there are for that, I can only speculate on it. But it wasn't because of anything I did or didn't do. I don't control the charts, I just trade on them. And that's the last thing that I'm going to say about it. You can stay here, but like don't test me, bro. Wilson Jerome, yes, the moving average RSI. This is a new indicator that I tried out called the moving averages relative strength index divergence indicator. It's basically an RSI, but it has a little bit more indicators on it to point out when you see bearish or bullish divergence, and also hidden bearish and hidden bullish divergence. It's a really, really nice indicator. I've mainly been using it to experiment in a forex paper trading account because I wanted to try and do more forex trading. But yeah, I started watching the moving average on YouTube, which I highly recommend that channel if you want to get into forex day trading. That dude is an excellent educator. I was loving his videos, and I got such a fantastic education over these past couple of weeks. We are in a classic bear relief rally. Yeah, I absolutely agree with you, my dude, Jeff Ward. So SPY, I actually did mean to talk about this, but let me catch up with the rest of chat to make sure nobody else is looking for tickers and such. If loving SNMP is wrong, I don't want to be right. I do not have an SNMP position right now. I had it in a paper account. I currently haven't been trading very much these past few weeks because I haven't been watching my positions. Methylmorphonin. Can I explain what happened to my RDBX position? Made a lot of money on RDBX. Thanks. Oh, I'm glad, dude. I actually got screwed on RDBX. I held it too long once it got up to $10, and I managed to get out break even, but once it had broken down below $4, I got badly burned on that rug pull, and I exited my position because the news of the acquisition by Chicken Soup for the Soul, it had indicated to me, I was wrong obviously, but it had indicated to me that the company was going to be sold for pennies to these assholes, and my thesis proved wrong because the stock pumped back up, and as it turns out, they're going to have to purchase the company's remaining shares at market price. So the higher the price is, the more expensive it will be for them. So as it turns out, it's the higher the price is, the more it's going to hurt Chicken Soup for the Soul because it is actually overvalued versus their own company's equity and their own market cap. RDBX is now worth more than Chicken Soup for the Soul is. So a smaller company acquiring a bigger one by market cap is pretty difficult to do. And I don't think they'd have the capital for it. So if the actual acquisition didn't go through, and it doesn't make sense that the acquisition can complete with a perfect 100% ownership to take the company private, but they still have a 60% majority of ownership. So they still have controlling majority of Redbox. All the same, I don't have a Redbox position anymore because I got burned and I didn't have conviction in the trade. So, and it turns out I was fucking wrong. I was wrong to make that call. I bailed out of my Redbox position and I took a big loss, and it ended up leaving me break even on the entire trade because I didn't take my profits up here like I fucking should have, and I did not trade down with puts and covered calls to protect myself and protect my assets. If I had done that, then I probably would not have gotten burned so badly, and I could have bought more down here at the bottom. But huge kudos to everybody who had their conviction in the trade, because y'all proved me wrong. This thing turned around in an amazingly unexpected way, and now it's forming a cup and a handle. So I'm not in it, and I'm not going to jump back in it because now it's too high, and I don't have the cash available to trade. But I hope everybody hits a fucking grand slam with this one. I will be so happy if I see you guys win this and see it rocket past $10 again. All right. IMPP. I can look at the chart. I'm not doing any petroleum plays though. Yeah, it's done a little bit of a pop, but I'm looking at these moving averages, just so that everybody knows. I've got you don't see a red, but if there was a red here, that would be the 200-day moving average. The orange is the 100, green is the 50, light blue or cyan is the 20, and the white is the 10. but it's getting rejected by the 20, which is not a good sign. So IMPP probably still needs to build some strength. It's showing some movement though, and that's good. I'd give it some time. Maybe see if you want to add to a position. I wouldn't buy it here. I would probably go about halfway down this candle and see if I could pick it up at a limit order for about 49 cents. Oh, excuse me. Sorry, I didn't mean to blast your guys' eardrums out. So, what are my thoughts on Mullen's share structure? Actually, I couldn't answer that because I haven't been looking at Mullen. I just happened to notice that it made a huge move today, so it got my attention. But I need to see how I need to see all of the filings and take the time to do that, and I probably don't have the time to today. Thoughts on BRQS? About ready to paper hand that shit. I'm sorry, dude. BRQS was another one that was a pretty bad rug pull, but I've been learning a lot and getting better with my technical trading, and I've got some great things planned for the channel. I'm going to focus a lot more on educating people. Mainly because I made a lot of really dumb mistakes calling out some of the squeezes, even though the squeezes that I called out were 100%, they totally definitely happened. The problem was I didn't really recognize when the market was turning around and the squeeze was hitting a top. And even though the squeeze may not have fully played out, the Ortex data is too slow to call a top. And it's also not completely accurate because there can be data errors, there can be all kinds of scrambling issues from the brokers sending their data haphazardly to the data provider that Ortex uses, and it's not a good way to time a top. So I went and I learned a lot more about moving averages, mainly smooth moving averages, but also exponential moving averages. That's the EMA. And I also learned how to spot specific charting patterns, especially when it comes to high volatility. And I've been getting a lot out of it. It's been extremely helpful. So I'm gonna hopefully plan to help some folks out here and get a little bit more information out to people so that when we recognize that a top is here, that we get out of our positions smartly and we recognize when we need to take our profits. If retail could do this, I'll say if everybody could do this, if it was easy, everyone would. But it's not easy, and I'm grateful for getting the opportunity to learn how to do this better. And I'd like to pass it on to more people because the main thing that I don't want to happen is I don't want my channel to become a pump channel where I'm talking about these stocks and just by the nature of me talking about it gets people to buy it just because I said so. That's not what this is supposed to be. We're not supposed to trade just because some furu says so. It's stupid. That's how you get burned. I want people to see the setups and recognize the charts, show that momentum is in your favor to take a directional trade. And I want people to recognize when you've reached a top and get the fuck out and don't hold on to a burning wreck. Just bail out with the money. Just bail out with the money, get out, and then buy at the bottom. And that's the way you trade. And I mean, if you don't want to short a company that you believe in, but you want to protect your assets, then recognize when it's turning around and then start selling some covered calls or buy some protective puts so that you can exercise those puts and then exit at a higher price and then immediately buy shares at the new low price. So we'll be focusing on that stuff. But anyway, to answer your question, I'm sorry I kind of went on a bit of a tangent. BRQS is it broke down on a double bottom pattern, so now this is actually not good right now. It could go lower, but it is showing that it's got some support here. So this level is pretty significant. What I would do is draw yourself a line at 15 cents. And that's the line in the sand for BRQS. It needs to probably retest it at least one more time. If this ends up forming a double bottom, then what you would want to see happen, it could form a double bottom here. So what BRQS could do, and this is what I would be watching for, is for BRQS to trade down to here and stop before this line. It can cross with a wick, but it must not close. You cannot have a closing candle below this area or it's going down further. So wait for this. Be patient. If you want to keep trading BRQS, if you want to get out of it while it still has some value, I know it's really, really low right now, but you're also not going to get much out of the trade if you're planning to go back into it. So if you want to set aside some capital for it, then the way that you would trade this possible double bottom is to look for support here at 15 cents and see if you get a wick on the daily candle, or check an hourly candle. That can also tell you what you need to know. And look for a wick down and a close in this area or above. It needs to be here or above. You really don't want it to close down below this area. What you want to see is a deep wick and then a bounce, like a big V shape. But keep an eye on this if you're interested in trading BRQS. At the moment, I don't have a position. I'm not recommending anybody buy or sell it. I'm just letting you know what I see on the chart. Hey, Stuart, thanks very much, dude. I'm doing okay. Things are just really, really busy. It's very, very hectic over here. How does RDBX look? Very strong. I will say that the chart looks extremely strong. You have an inverse head and shoulders on this hourly. Let me actually draw this out for you guys. As it turns out, I didn't know this until last week, but yeah. As it turns out, TradingView has some pretty awesome TradingView has some pretty awesome patterns, which I thought was cool. So there's your inverse head and shoulders pattern. It's pretty clear that we have the neckline formed here. So we did end up breaking out above it, and now it's retesting support here at $7. So what you want to see is for it to consolidate here, which is what I expect it to do. I would expect it to consolidate. Let me do a little ghost feed. We'd want to see it consolidate upward slightly and just kind of bounce around here for a little while. And then once the moving averages get up here to provide some support, expect it to start making its next move. That would be my my hopeful scenario for this one. But you need to wait for this consolidation to finish playing out and make sure that it doesn't break down below this support. If you see it breaking down below here at $6, then we're probably going to start retracing back down to 5. So be patient with this one. Give it some time. If it's going to consolidate and make another leg upward, you probably won't have to wait terribly long, but I wouldn't buy any options until I see it choose a direction. It's going to have to take some time. The fact that Redbox has made these repeated moves is very encouraging, though. Like I said, I'm not taking a position, but I am bullish on it. I hope you guys win. Yes, I will take a look at AMC. Hey, Captain Cannon, nice to see you. Yeah, my big focus now is that nobody holds bags anymore. We're gonna make our wins, and then we're gonna take our profits, and we're gonna play smart. ATER. Bada bing. I'm not sore about RDBX. It's just it burned me really bad, and I don't have cash to play it again. I can't do it. It's already made a huge move, so now the risk to reward ratio is way too high for me. If I buy it now, I'd just be making the same choice that I made before that got me burned before. I'm not going to do it. I'm just glad that everybody held their conviction and they are still winning. Let's go ahead and take a look at ATER. We'll go take a look at AMC in a little while. Okay, so ATER. I am watching ATER. We'll just pretend this doesn't exist here just for a second. So I was taking note of a double bottom pattern that had formed right here. So again, like I was saying, a double bottom is a situation where you have these red candles dragging the price down and a big push down to the downside. So the sign that the double bottom is completing is, well, first, let's look at the overall picture. You have a gap here, you have a top here, and resistance. So this is clearly resistance. We're probably looking to see this gap get filled. There's another one up here, but we'll ignore that one for now. So ATER got pushed back down, and it's looking to fill this gap and break up past this resistance. So that's what we're hoping to see happen. We'll bring this down a little bit further. Now the double bottom, we have our first bottom down here. We have these red candles which have the upper bound of support. We saw the green candle bounced off of this area, which is where it opened at, and it also wicked down all the way down here. So really this is just these two areas. So we've got the red candles here that establish the upper zone of the bottom for the double bottom pattern, and this is the very bottom. And now we have this candle which wicked down into this zone but closed above. That's a sign of bullishness because it rejected that area. Normally with a double bottom pattern, what you are looking for is to check that a area of support is accepted and accepted strongly. And in this case, it was accepted very strongly. So ATER is setting up to make a nice move. But another situation that could have happened is you could have had a big close down into this area and maybe even a wick down, like so. And the wick down here below is fine, and this candle closing in this same zone, that's also fine. But you need to see it bounce immediately afterwards, and then you would buy on these green candles because you've seen confirmation. Now in this case, that's not what happened. It just wicked down into this area, and then you got a confirmation here. So you would have bought on, you would have probably tried to capture a better buy-in price somewhere here, like halfway down the green candle, this big green engulfing candle. But anyway, to help everybody out, this is still a situation with the double bottom that I have illustrated here with the with these two with this imaginary candle. If this had happened where the candle closed just below that area of support, then this double bottom would be broken. It's not a double bottom anymore. If it closes below the lowest wick on the first bottom, then it is not a double bottom pattern. So be careful of those situations because this is actually a very bearish pattern indicating a break of support. You need to see this candle get rejected and spike back up. It can have a long wick, but it cannot close down there. That's a very important part of the double bottom pattern that I had missed a long time ago. So anyway, ATER, obviously I'm pretty bullish if you're reading my charts, but I was speculating on possible price action right now. I'll just get rid of this because I know it's like really confusing looking. Can I just delete all of this? Oh yeah, there we go. There we go. Okay, so I'm using the RSI divergence indicator from the moving average, TMA RSI div, and this is the STC indicator, which is it's another momentum indicator. But what I'm looking for is for BBIG to complete this consolidation phase and then make a move up. Right now, the moving averages are getting nice and close together, which is very good. And you see that we're now trading above the 50-day moving average, or I'm sorry, this is the hourly, but 50-hourly moving average. So this is a possible sign of a reversal incoming. If the 50 crosses above the 100, then you would have a golden cross. We've already had a 2100 golden cross. And then this red line here is the 200-day moving average. So as this comes down to meet the price, we would want to see the price break up above this moving average. And if we can get the 50 daily moving average to cross above somewhere around 4, maybe 350, 375, then that would be a huge indicator of bullish momentum and also create a buy signal. Oh man, you guys are throwing all the requests at me. Let me cover AMC since everybody had asked. So AMC also looking very strong. I had called out this double bottom pattern as well. I'll look at it on the daily so y'all can see it. So this is a significant double bottom pattern right here. You see the same situation. You had the top of the green top of this candle, the bottom, bounce off a wick, and then we closed in the area and then bounced again. Hey, stand by, guys. I got to check on something really quickly. We'll just go ahead and move over to the 10-minute chart on AMC so we can. We'll make it the 5-minute chart. What the hell? But as you can see, we're moving with the trend, so I'm liking the setup. So we'll watch this for just a minute. I got to go and get some coffee and take care of something, and I'll be right back.
Just saw a big boy print on a bullish IWM option play.
SPY looks like it wants to try to come back up. I don't know. It looks hesitant.
It's damn near $900,000.
Buy signal came out on the VIX, so hopefully it's wrong. Ain't live, it's all good, G. Ain't live, it's all good, G. Ain't live, it's all good. Spy wants a bid, Tesla wants a bid.
Are you watching the stream? Is that why you're echoing a little?
Of course I'm watching the stream. Ooh, Tesla wants to break. Let's go, Tesla. Come on, baby. I'm getting out of this Tesla. For sure, for sure.
I've heard those exact words, including the for sure, last week.
No, but this time I'm dead serious. I'm getting out. My call's up 110%. I better stop being greedy. I want some GME. But it's because it's right there at the trend line, bro. I just wanted to break this trend. Once it breaks this trend, I'm out, skis. It's trying to reject it right there.
Hey guys, I'm back.
Ooh, red box is taking a hit. Sweet. Let me check my puts.
Boule shows no mercy.
Let me check my puts. Ooh, nice. Give me my money.
I'm coming through on Discord, aren't I?
You know me.
Yeah, we can hear you.
Okay. I wanted to make sure that I wasn't I didn't have a secret mute on or something, and that I wasn't getting through. Red box vomiting red stuff. Jesus, how bad is this? Oof. Yeah. Yeah, that's what I was worried
volume.
about.
Any thoughts on BBIG? You know what? I do have a guy
I got
on
a
the
thought or
Discord
two, but it's not appropriate.
I have a
This
guy
feels
on the Discord
like
that knows everything about BBIG. His name is Logical. If he would like to come out and talk about BBIG real quick, I wouldn't mind at all.
And demonetized.
I've already said so many cuss words. It's not even funny. It's all good.
I'm not even.
I'm sure he could do it without being demonetized.
Yeah. I'm good. I mean, look. Honestly, we all know the information at this point. Everything they pushed back the date. There was a large retail push into it beforehand. Everybody was loading up. They did. They pushed it back a little bit. When that news came out, there was an immediate drop down. People got out. There is a little bit of noise right now with five narrow lane picking up 22 million shares. I'm still waiting to get some more clarity around the transaction and why, and there's a lot of speculation floating around on it right now. There's some good stories, there's some bad stories. Just gotta wait to see where the dust settles on it and see what the real information ends up being with them. It could end up bullish for us. It could also end up really bearish. So it just depends on how that plays out. But the long story short with BBIG is they push the date back. There's going to be a vote that comes up soon in order to determine whether or not they triple the available share count. That's not generally a good thing for people who are long on the stock. It's good for the company. The company will do well with a lot more funds that they have available in order to make their things happen. Might not play out that well for people who are invested in a long position on them. So you just got to kind of, I don't know, it's your risk level. Are you willing to get back in before the dividend spin off in order to get your tied shares? Are you willing to hold through until then? Or are you just two middle fingers up, turning around, walking away from all of this because of the way things have played out? It's really dependent on whatever your risk tolerance is and what you're looking for.
Right. I'm seeing an interesting pattern here with BBIG. So
Sounds good to me.
thank you very much, Logical, for giving us that quick breakdown. And I'm in agreement that you have to make a personal decision of whether.
Let's go.
Am I coming through, or is?
Yeah, I can hear you on Discord.
Okay, because Boule keeps cutting me off, and I don't know if he's hearing me or not. Are you able to hear me, Mr. Boule?
Come on, Tesla. 5 more bucks.
I don't think he can hear me.
I think he can hear us.
Who can't hear us?
Boule,
Can you not hear TD?
Hey,
Oh,
can you hear
shoot.
me, dude?
No, I can't. Oh yeah, there you go. My bad.
Yeah, I kept trying to talk, and then you kept cutting me off. I was like, is my mic broken or something?
Yeah, my bad, man. You know, I had to.
It's all good.
That's
It's all
my
good.
bad.
No worries.
But yeah,
All right. So
you
I
got
was
it,
just
brother. I'm
saying.
out.
Oh, you're good, dude. Thank you. Thanks for keeping folks' interest peaked. So, BBIG. Thank you, by the way, Logical, again for that quick explanation on it. So, like he was saying, it is kind of a personal decision at this point if you want to stay in BBIG. I made a executive decision to get out of my BBIG position while it was moving up because I had seen options, lots and lots and lots of put options print on the 18th of May. So I got out of my calls and I bought some protective puts on my shares. So the dividend, since it didn't play out, I exercised those puts. I was only going to hold those for the next week, and I'm basically just I'm exercising them because I don't think the price is going to get any lower. So I've gotten out of my shares and my calls I sold, so I'm completely out of BBIG right now. It does not mean that it cannot move again, but after the decision that the executive staff made to delay again, I am I am I am pissed off at their executive staff. They were already on thin ice with me, and the decisions that they've made to repeatedly delay things and dilute on their investors and constantly just betraying the trust of their shareholders is I'm out. Like I'm out. I'm done. BBIG, I'm not touching it anymore, and I'm staying out of it. I'm not saying that it's a bad company, and I'm not saying that people shouldn't buy it, and I'm not saying that it can't squeeze, but the executive staff have betrayed retail investors and dumped on us multiple times, and they fucked up repeatedly with their filings, and I'm done. I'm done. They have made too many fucking mistakes for me to take another risk on them because I've tried investing in their company 3 separate times, and 3 times they have rug pulled me. And you know what? That's my personal decision. People can do what they want. There's a good setup here, and I can tell you objectively, like this ascending triangle is a good sign. This support, if this keeps playing out as it consolidates, it's going to take a long freaking time. But if it consolidates like this and keeps rising up, when it breaks this ceiling at $3.50, it'll go. Like, it'll move. But, like, their executive staff pissed me off, so I'm done.
To add to what you were saying with them the feeling amongst a lot of retail is that they screwed a lot of their retail investors on multiple occasions. One of the things that I've been asking of people in different calls that I've been on and stuff is just to think about people. There's a lot of people out there that you're hearing right now that are saying nothing's changed, it just pushed back the date. That affects a lot of other things that are in play. The vote coming up now, Tide probably won't come out until after the vote. There's other things to consider with, if you take in totality all of the different moves that they've done, it is giving off a vibe that they want retail out of this.
Yeah.
They are early exercising warrants, giving Hudson more shares to vote with. There's a $22 million share purchase that just happened with another with 5 narrow lane. So it seems like there are things happening right now that would kind of project a view that they want retail out of this, because I think they're afraid of, and this is just my own personal opinion, but I think they're afraid of the backlash that retail is going to have with a no vote on this vote coming up. And they're delaying it, trying to get as many votes as they can into the institution's hands so that they can get their yes vote. Because if they get that no vote, it is a very bad thing for the warrants that they already issued, because they were dependent on getting an increase in their available shares later. So if that vote doesn't happen, they are in trouble.
Yep. And they can't say that because it would break their fiduciary duty to their investors, including retail investors. So they can't just come out and say, like, fucking sell your shares, you dumb apes, because you're screwing with our plans. And the thing is like, that it could actually hurt the company in the long term for people to hold shares, ironically. Like, it could. But what I see this as, and the company's decision to act this way, is that they look down at retail investors. They do not appreciate their retail shareholders, and they want them, they don't care how badly people get burned on their investment with them. And that's a really shitty thing to do. But that's kind of how the business world has just been, from what I've seen. The whole experience that I've had in the stock market since we've been doing this is that most of the companies that we're invested in, they really don't give a fuck about us. They really don't care. And we could kick rocks for all they care. They only care about their majority shareholders and making them happy and making them money and giving them their long investments and letting them know when to sell and all of that bullshit. So you know what? At that point, I'm just going to try to make what money I can, and I'm going to help everybody else here in the retail community make the best money that they can trading on these stocks, finding the squeezes, getting out at the top, protecting ourselves, being smart, playing smart, and hopefully at some point we'll just go ahead and make our own hedge fund, and we'll work on absorbing everybody else, and then we can actually do this shit ethically for a change. Maybe everybody else will feel a little bit better about that. We're gonna have, I might be a demon, but I'm honest about it. Like, fuck. Better the devil you know than the devil you don't. Okay, so I've got a lot more requests. We were checking out. Let's see. I already did ATER. Redbox was taking a hit. Yeah, it's showing some support though. It's showing some strong support here, and it's bouncing off of. If you look at the 10-minute, it's bouncing off of the 200 period moving average. So this is a good sign. This is just consolidation. So yes, it's a big hit, but be patient. What you want to see happen is for it to continue bouncing off of this. A stronger moving average would be the 100 moving average on the 30-minute. So, but also take note that I've got these two volume profiles here. These are volume shelves. These just kind of let you know how much volume was traded at a given price range. And this price range we're at, there's a lot of green here, okay? There's a lot of buying support. There's a lot of purchases that occurred in this area. So lots of people are in the green down here. Now, we're testing this area, so we need to be a little bit patient to see how this plays out. But do take note that we are flagging down. So let's go ahead and draw this out. Actually, let me do an hourly. Yeah. So we made this big move up, and now it's creating a bull flag. This is a bullish pennant. So this is actually a good sign. It's consolidating a little bit down, but it does have the potential to make a move. And if you look a little bit further out, you'll see that this big move here is on an inverse head and shoulders. You got the shoulder, the head, the right shoulder, and the move up. And now it's bull flagging. So this is if you get solid support here and we see it bounce and get back above $7, look for it to break out above $7.30 and start making its next move. If you see it break down below and it retests 650 and does not hold, that's probably your sign that the bears are back in control. So if this is a conviction play for you, and be sure that it's a conviction play for you. If you really believe that Redbox can squeeze to new highs, you need to be careful and try not to make too many assumptions about that. But there is a ton of short interest in this, and I don't think that the price is. I don't think the price reflects reality given their equity versus their debt. And I know that Chicken Soup for the Soul doesn't have the money to buy the rest of Redbox's shares at prevailing market price at these prices, so they want it down. So, given that, this does have the potential to squeeze, and it would absolutely burn Chicken Soup for the Soul. It would. Watching Redbox squeeze in the face of that absolute dog shit exchange price that Chicken Soup for the Soul writ into their acquisition filing, this would be the greatest example. It would be a hilarious, ironic, and what's the word I'm looking for? Poetic justice. It would be poetic justice for Redbox to squeeze now after Chicken Soup for the Soul announced their acquisition with a shit price.
So it would burn their soul.
Yes. Yes. And I love burning souls of evil businessmen. We have a special circle. It's called the Circle of Avarice. Just for them. It's kind of funny how the stock market is its own fourth circle of hell. I don't know if anybody here has ever read the Divine Comedy about Dante's Inferno, but I do find it a fascinating read, and I find that the stock market it accurately reflects Dante's fourth circle of hell, the circle of avarice and greed. The hoarders and the spenders are in a permanent tug of war, battling each other. The hoarders are trying to roll giant bags of gold up a mountain, and the spenders are always trying to take the money and drag them back down to the bottom. So they're in a never-ending fight. And I thought that, wow, that feels like exactly like what we're doing right now. We're kind of like the hoarders trying to gobble up all the shares and push the price up the mountain. It really is how this feels. Is it illegal to delay the spinoff to try to sway the vote to dilute? Yes, but only if you can prove intent. It is illegal because they are intentionally trying to manipulate the corporate vote. It's actually a form of corporate fraud. And honestly, if it was the case, retail investors might get you'd have to find a lawyer to argue this in court on our behalf. But yes, you could say get a corporate lawyer to begin a class action lawsuit if it turns out that BBIG was manipulating the vote and manipulating their share actions, trying to dilute so that they can put more shares in the hands of an agreeable shareholder to purposefully sway the vote and prevent the majority from getting their votes counted accurately. But that would also be really bad for BBIG because, well, it would probably cause their stock to tank. Is BRQS still a thing? I talked about it about an hour ago, Magic Potato, if you want to take a look at that. If you go back in the stream, I was talking about it a little while ago. Biora and ALZN updates would be nice. Okay, yeah, we can do those. And then after those, I'm going to move on to the overall market because there's some things I want to talk about, and I want people to be aware of some of the shit that's going on. We've got
ALZN. She got a little bit of a spunk to her right now.
Yeah, I was noticing ALZN started to form a double bottom and made a move. My calls expired worthless, though, so I don't have a position anymore. I'm kind of sad about that. I should have bought further out. I was kind of dumb. In fact, I should have bought shares. I shouldn't have bought calls at all. It was actually really stupid. But what could you do? Anyway, so let's look at it on the daily. Get those session lines out of there. So we've got a triple bottom setup. This is actually pretty cool. So we've got this big red candle that wicked down here into this zone, and then we had another candle that closed in that zone and wicked down a little bit further, and now we have this green candle showing support in that area. So right now ALZN is actually gearing up for a move, and there's another additional confluence here in the form of this pennant. So the thing is that ALZN is moving to the downside, broadly speaking, with this big decay curve. So its price is about as low as it's probably going to get. But normally this would be a bearish pennant given that it's taking a sharp move to the downside and it bounced and then it consolidated down. So normally you would take this as a sign that it's getting less, that there's less momentum to the upside. But since we're establishing like a very solid line of support here, this line in the sand at 86 cents, this is good. This is very good. And the resistance is getting, coming down. So if we get this breakout here and get above the 50-day moving average, then we might see ALZN make its next leap. And that would be pretty exciting. This is one of those stocks that you have to wait for that catalyst, though. You need to get confirmation. So we need to wait for the catalyst. There probably some news on their latest research for Alzheimer's treatment. That would be an excellent additional event to push things in our direction. Natsuka Rafayashi, nice to see you, dude. Don't make me get my girlfriend's credit card. All right. I'll take another look at RDBX because everybody's a little bit concerned. Let's see. Yeah, it's taken a bit of a hit, but we need to be patient. Give it some time. We're only on the 1 hour, and this is the daily lull right now. Remember, we're only coming out of the lunch hour just now. So be patient. Just be patient. Wait until we come out of the lunch hour. This is low volume time. This is when shorts attack. This is when shorts time their attack. Low volume equals big movement. If somebody wants to push the stock in a specific direction and start hurting people's convictions, this is when they'll do it. Let me fix these lines a little bit. There we go. Still looking good. Still looking good. You just gotta give it time. Okay. Biora, yes. I was meaning to get to that one. Thank you very much. Biora Therapeutics. This one is also showing potential turnaround. We have this hidden bear flag, or hidden bearish divergence on the RSI. That's what I love this indicator for. This indicator points out hidden bearish divergence. This is actually difficult to see, but you see the price making lower lows and the RSI making higher highs. That's hidden bearish divergence. So that would have signaled to you that this move to the downside was coming, but you could use this. You normally use hidden bearish divergence to get a better fill price, because hidden bearish divergence is not necessarily as strong as just regular bearish divergence on the RSI. Also, as I found out through my education recently, overbought and oversold doesn't really mean much. Like the 30 and the 70 line really doesn't matter that much. It does kind of indicate when a stock is overbought and oversold, but like it's not really what the RSI is good at telling you. Is much better. Excuse me. Get this fucking spammer out of my chat room. Get the hell out of here. Get out of my chat. Frickin' bots. Okay. So Biora, I'm actually pretty excited about because of this bounce here. The what you're actually seeing is an inverted head and shoulders, and it's nearly completed. It's nearly completed. So I'll point it out to you guys. So here's your neckline. So doot, 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 doot. And if we can get this breakout above 90 cents, that would be awesome. I've learned how to use so many new indicators. I've become an indicator whore. I love TradingView indicators now. Getting this software was the best decision I've ever made in my life. Big thanks to Occam's Phaser for convincing me to pull the trigger on getting TradingView, and Cat Morris. Cat Morris was a big. He convinced me to get this. That's a whole different kind of naked shorting. Yeah, we got to keep an eye out for these bots. They've been getting more and more aggressive, and this is a clean, family-friendly channel. If I see that, I will absolutely boot them out on their ass. It's a bot, and they won't feel anything about it, but I'm going to take a personal stance of anger and rage against that bot, and I am going to channel it through to their developer. They'll just have this nagging feeling in the back of their mind while they're having their morning coffee, like, oh wow, I feel like I've disappointed somebody, and I don't know why.
Hey, DD, have you spoke to Cat lately? I hadn't seen him in a while. Him and I used to play Uber calls a lot.
Yeah, I haven't seen him in a while. I sent him a message the other day. He's been taking care of some family business at home, so I've just been giving him his time and his space. But I'll let you guys know when I hear from him again.
Yeah, I was just wondering if he was all right. That's all. I
Yeah.
wasn't trying to get in his Kool-Aid.
So, head and shoulders pattern on Biora. We've got a lot of new patents that are getting that are receiving grants on Biora, which is excellent. Their intellectual property is intact. Let's see, how long have they been below? How many days have they been below $1? This was the first day they closed below $1. Closed above, closed above, closed below, closed below. Okay. All right, so this would be the first day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, yeah. Biora is 10 days in to their 10 days in, so they are eligible to receive a warning from NASDAQ for being below the trading listing requirements. So they need to get back above $1, but don't anybody panic about that. They have a whole year to do it. They also haven't received the warning yet, at least not to my knowledge. So big news happened on May 19th. Biora received patents for targeted drug delivery system. This is the thing we've been waiting for, and I'm so excited. I can't wait. If mine leaps print, I'm going to be a fucking rich man.
Did you see they posted about their trial results, I believe, this morning?
Oh, no, I didn't. I missed that.
Let me see. I'll go try to find.
Yeah, I'd love to see that. That would be excellent. I'll go pull the news up on my other terminal. Shares presentation of patient data establishing a correlation between drug levels in colon and patient outcomes in ulcerative colitis.
That's it.
Nice. All right, let's go show this off. Where is my Google Chrome? There we go. All right, guys.
Eating RAM somewhere.
Oh my god, it's so bright. I wish I had dark mode. Please, Google. Oh, fucking hell. Oh god, it hurts my eyes. I definitely drank too much last night. Drunk trading is the best, though. Okay. Biora, the biotech company that's reimagining therapeutics. The presentation titled Tofacitinib Tissue Exposure Correlates with Endoscopic Outcome. All I know is that this is a Pfizer drug, and it's it had an outcome. That's about all that meant to me. Endoscopy. That's let's see. Endoscopy is.
They went. I'm pretty sure that means they go in the colon and they took a sample.
Okay.
Because they wanted to see the tissue saturation from it.
Ah, gotcha. Thank you very much. This study supports the hypothesis that a tissue concentration of tofacitinib at or exceeding IC90 is directly correlated to significant improvement in patient outcomes. Excellent. Our targeted delivery system platform is uniquely positioned to be able to safely deliver the desired amount of drug to the diseased tissue in ulcerative colitis. Our phase 1 clinical study, planned to begin later this year, along with our various safety data, will provide us with valuable information on concentrations of tofacitinib in tissues, as well as the level of systemic exposure. We recently also shared data about the potential importance of combination therapy for UC patient community. Reducing systemic uptake with PGN600, that's one of the secret drugs that's going into the, that's the DDS, or OBDS, OBDS. This could enable combination therapy to target multiple inflammatory pathways, We believe our approach could allow for multiple ways to improve therapeutic outcomes for the large number of UC patients who are still significantly lacking in options. This is very, 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 very fucking good. I love it. If you are holding shares in Biora, you are holding on to a lottery ticket, and it is a winner. You just have to wait until the fucking date. This is like buying a lottery ticket a year ahead of time, just going back in time and buying a winning lottery ticket. I shouldn't talk like that because it sets expectations so high, but I am just so excited by this company and what it's going to create. The technology they have here is fucking amazing. Think about if you had to take a drug like that, if you had to have like those kinds of drugs that have all kinds of ridiculous side effects, wouldn't you rather it be delivered in the exact correct dose directly to the area that needs it, so you have the minimal necessary exposure to the drug and you don't have to take a pill that's just like, I guess that's enough. Dude, this bot is pissing me off. It's back again. I'm going to go start finding these accounts, and I'm just going to, I don't know, make a lot of empty threats, I guess.
Oh man, it just sounded so defeated.
Hey, Marcus. No worries, dude. You're not
So
flooding
I'm
around. I know you're just I know you're just worried about the red candles on the chart.
I was trying to spell tofacitinib, but I can't because I was just looking up what the side effects of the drug are that having a lower dose could help alleviate, but I can't seem to spell it.
TOFACITINIB. I can spell it better than I can. I can spell it better than I can say it. So I'm gonna move on. But we've got really great news coming in Biora, and this inverse head and shoulders pattern has my jimmies fucking rustled. Oh, wait a second. Do we have a... We do. This is a double bottom pattern too, on a weekly time frame. This is a big double bottom pattern. See this big wick on this red candle? It broke below the support level from this deep red candle from way back in time, back in August. This is on a weekly time frame, by the way. This is a double bottom. Fucking hell. And with the inverse head and shoulders on the daily chart, this is a confirmation move. We break past this neckline. I'm so in on this one. I'm gonna have to see if I can get a few more leaps. This is one of my big conviction plays. What about the free float of Biora? Actually, it's been a while since I've looked. 164 million shares. It's not a lot. It's not. Like, seriously, I think that the entirety of retail could easily buy that. There's some retail whales that have several $1 million. Combined, I'm sure that retail could easily buy up the entire float of Biora and just DRS their shares. Which, by the way, I was tracking news and several... these were speculative statements made, but there were multiple users on Reddit that were reporting that they couldn't DRS their shares because DRS, like CompuShare, actually couldn't find the shares to inventory them. They couldn't buy them and then record the share for direct registration. So that's an indication that the market is starved of GameStop and AMC shares. That's big. That's a big fucking deal. DRS may actually be working. I don't know. Like it's kind of a hopium situation right now. But I think that the signs are all there. And that kind of brings me back to the other point that I was going to make about the broader market and what I think we're about to see happen here when this liquidity crisis finally fucking hits us, which I want people to be prepared for. So we'll take another look at AMC and GameStop really quickly before we move on. But they're both getting ready to move pretty nicely. GameStop double bottomed hard. So did AMC. Nice big double bottom here and here. I was able to see it easier on the daily time frame, but that's what these support resistance lines are for. This was the lower band of the double bottom. So bottom, bottom, and we've broken up through the top. So AMC's consolidating right now. I'm thinking it's going to have to consolidate down to about, it'll probably break down past $14.50, maybe down to $13, but at the lowest point. But if people want to buy a dip, I'd be looking to load up around $13.50, between $13.50 or $14. So, yeah, I want to talk about the fucking market and the fact that I think we are in for a correction unlike any other. If you haven't watched the video that I released this morning, I highly recommend you do. But if you didn't, that video was from our professionals meeting over the Memorial Day weekend. And I took the time to break down my thoughts on where we are currently at with this market. And essentially the whole video or the whole session was me going through the history of all the previous market crashes that we've experienced ever since the Great Depression was caused by the stock market collapse of 1929. And all of these market collapses happened, all of the big ones happened in the fall, September and October. Those months, for whatever reason, are magnets for market crashes. The October Black Tuesday or Black Thursday, I think it was Black Thursday. But the crash of 1929 happened in October. The stock market crash of 1987 happened in October on Black Monday. And that was caused by the trading system, automated trading systems, repeatedly selling shares so quickly that they collapsed the entire stock market and people got washed out. That was a fluke, basically technology turning against man. But again, that happened in October, and then after that, we had the dot-com bubble, which also began tumbling in August, and then we had September 11th, and then it crashed completely in October. And the top of the dot-com bust, when the market reversed from the top, was again in October. So, and then the financial crisis. So I can't forget the 2008 subprime crash that started in July and collapsed in October. So October is a scary fucking month to the stock market, I guess. It's spooky season is too much for it, and the market just doesn't like it. All the market crashes that we've experienced that have been the worst recorded ones always happen in the fall. And we are on track for a really fucking scary fall right now. So I want to kind of go over the structure a little bit of the previous market crashes. I'm only going to cover the 2008 subprime crash right now. But if you look at the previous market crashes, then I'm gonna have to delete this because it's kind of meaningless. And go wipe out all these lines. Okay. So the subprime crash was caused by we know this now, but back when the America was going through a big housing boom. There was a whole bunch of terrible lending standards where banks were just loaning out a bunch of free money, and they were not checking they were not checking up on people's income and their ability to pay back the loans. And the banks didn't care because they were able to shuffle those loans into mortgage-backed securities, which they then shuffled into consolidated debt obligations, which then they sold off to investors in pension funds, hedge funds, blah, 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 and so on. They were also able to take a giant chunk of that MBS and they were able to sell it to the Fed, and the Fed took on that risk to offer money to the banks. So anyway, there was a bunch of investors that were making money hand over fist on these things, but the problem is that a lot of people recognized that they were bad loans. They were really, really bad loans, and the devices, the mortgage-backed securities, not so much at risk because you could check those in. You could check up on the loans on an individual basis, and mortgage-backed securities are usually like a basket of like 100 to 1,000 loans. So the chances that 100 people are going to default on their loans, not very likely. But you can check up on 100 loans much easier than you can check up on the loans of 100 mortgage-backed securities in a single consolidated debt obligation. So that's what the CDO was the danger. That's how CDOs became so dangerous, is they were so huge and bloated, and they were stuffed, crammed full of just garbage mortgage-backed securities that were rated like B, double B, triple B, and so on. And then they diversified it with AAA, double A plus, and so on. But the thing is that those mortgage-backed securities were rated based on a faulty rating system because Standard & Poor's, Moody's, and a couple of the other ratings agencies, they were not doing their due diligence. They were not checking up on the income from the individuals that took on those loans, and the banks gave them that money because they wanted those mortgage-backed securities so that they could sell them. So this cascade of terrible decisions and terrible due diligence led to the financial crisis. And when the default ratings skyrocketed, I want to show people this. This is exactly what caused the first dip in the market. So it was delinquencies on all loans secured by real estate. So this is what happened. So beginning of the housing boom, everything's great. Like nobody's in any danger. Delinquency is like below 2%. It's like 1.5%. And then all of a sudden in 2006, this was after Dr. Burry, Michael Burry from The Big Short, took his bet. He saw delinquency rates rising rapidly. He took his bet against the housing market and expected people to start defaulting. And for ARMs, that's adjustable rate mortgages, would start to get out of control because the rates were going to go up. People were going to have to pay bigger premiums on their loans, and they were going to start to struggle. And the rising default or the rising delinquency rate, that's this orange line, this was the signal for that. So by January of 2007, the delinquency had risen to about 1.8%. And then finally, after it had gotten to its highest point at that time, in early July 2007, we had reached a 2.3 delinquency rate, and at this point, people were starting to default. There was a rise in defaults on mortgages that was starting to scare the market, and this was when things started to really get out of control. So in October of 2007, the defaults continued to rise. Standard & Poor's and Moody's, the ratings agencies, it was mainly Standard & Poor's, they stepped forward and said that it's okay. These defaults are within our models. We accept that there are higher default ratings, default rates than usual, but we expect them to go down by next year and things will get under control. And the opposite happened. The Fed raised their rates because the stock market had been overbought and inflation was on the rise. So I'll also go ahead and get the inflation on here. Go ahead and get that up here. All right, so inflation was down here by like it was like it was still pretty high. It was still pretty high during the peak of the housing boom in July of 06. That's like 4.3%. It's not terrible, but it's still considered pretty high. The interest rates went up and brought it back down, but then they relaxed them and inflation started going up again. And this was caused by people struggling to make payments on everything, and the cost of living kept rising. As well, people were starting to go into default wholesale because they couldn't afford, the basic necessities. So if you're going to choose food or your house payment, you're going to choose food. It's just the way it is. So the inflation started going up again, and then the Fed raised the rates again once we had gotten to about 5%, and that's when things got fucking crazy. So at this point in spring of 2008, the market started to really take a sharp downturn, and it saw a 15% move to the downside from May all the way through to June. And until July. So it was at this point that it was obvious that the market had turned bearish, but it should have been seen all the way back here when all of these moving averages you see, which is the red line is the 200 moving average and the green. Those are the two I want you to pay attention to. Red is the 200-day and the green is the 50-day. When the 50-day moving average crosses below the 200 moving average, that is a death cross. Oh, I see we're running on Mullen. Okay, we'll go ahead and we'll divert this over to Mullen really quickly. Let's go see what it's doing. I'm probably going to have to sell some of my calls. Ooh-wee, wow. Look at that. That's lovely. All right. Dude, Mullen. I love it. I still am holding on to $2 calls for Mullen. I've been holding on to these. I did not expect them to be worth anything. All right. Oh, that was nice. It's a lovely surprise for the day. Power hour is something else, ain't it? Let me double check my calendar. I got to make sure that I'm not about to... okay, I've got a half hour left, and then I got to go. But I'm really glad to see this. Look at this. Mullen popping on some serious volume. That's excellent. Mullen was in consolidation for a long goddamn time. All right. I'm going to need to go and check out the Ortex data on it to see where we are with the shorts. RDBX is getting hurt. Yeah, I know. Yeah, RDBX is kind of hurting. I'll open that back up again. Okay. Yeah, Redbox is getting punished. Wow. They really, really want it down. They're hitting this thing on such low volume. They're attacking the bid hard. I have a feeling that someone's trying to get a fill at a better price, though. Let me go ahead and check the unusual whales flow. I'm going to go and see what we're going to watch RDBX on unusual whales, and we're going to see what it do. Somebody sold $4, $5, $3, and $1 calls. It's not very much premium, though. It's only about $160,000 in premium. No, it's $175,000 in premium that they sold calls for. They're selling the $4 and the $3 for June 17th. Let me show this on screen, actually. So they're selling all of these calls in this basket, buying puts, selling more calls, buying more puts, selling more calls. Yeah, it's a lot of bear flow. The put volume has got the heaviest volume, and the premium is mostly bearish. So I don't know. I'm just going to tell people, be careful. It can, if it can turn this around, if it can get this candle to close back up inside of the pennant, then and start to move in the other direction, then it was just a fake out breakdown. But until you see this green candle close on the 15-minute or the 30-minute, you're not getting your answer. So you need to see this next candle close inside this pennant. If it closes below the pennant, not a good sign. They teleported the price big time. Man. They laddered this thing down so fucking hard. I hate to tell people to just get all down about it, but you might want to consider buying some protective puts if you're holding on to shares. Just as a hedge, you know? Make it so that you can get out. Make it so that you can get out at a profit. If you have the ability to do this and you know how to trade options, consider purchasing puts so that you have the option to exercise them at these higher prices in case the price gets hammered down. Make a decision. Make your own decision. Make your own decision about what you should do here. But an option to consider is purchasing puts at the money with a nearby expiration, like over the next month or so. And if Redbox collapses in price, that way you get out. But watch the charts. Take careful consideration of the picture that's being drawn here. And remember that you have support here. There's a lot of support here. And it is bouncing. But you need to see confirmation. You need to see this green candle close inside the pennant. We need to see Redbox close the day inside this pennant. It's very important this happens. Because if Redbox closes below on this and it starts to move against, then it's going to show that this support is not strong enough to hold the price here. So please be careful. I'm not recommending that you buy puts right now and saying it's coming down. Like, no, the sky's not falling yet, but you just need to look at the price and you need to be aware of what's here in front of you. Pay attention to the chart and don't make it a emotional decision. Don't take a passionate stance about this. Be smart, because even if you're right, even if Redbox can squeeze, even if we're right about that, you should not make your decision emotionally to just hold the stock. What you should do is expect them to hit it and knock the price down, and you should act accordingly. Be prepared for these types of movements and recognize the possibility that the price may go against us. When you work with that mindset, you can do things to protect yourself, and you can even make money on the way down so that you can buy the shares at a lower price with stronger support. But it looks like it's coming back up now. We hit the target that they wanted. They got their target and they washed a bunch of people out. They probably were hitting a bunch of stop losses, and now they're wanting to scoop some shares up. So I bet you we see this candle close in the next hour back inside the pennant, and you'll start to see it move back towards the upside. If we don't see that and it continues to move down to here, then you're probably looking at it forming a head and shoulders, which would not be good. Yeah, what's up?
TD, you're still showing unusual whales.
Thanks, Sliver. I'm sorry, guys. Yeah.
No problem.
Okay, so like I was saying, price is starting to move up. Like, you need to see this close up inside the pennant. We do have strong support here. I'm using a volume shelf to tell me this. The volume shelf is extremely helpful. If you have TradingView, strongly recommend this tool. It's very, very good. But yeah, don't trade this emotionally. Just recognize that you got a lot of support here, so there's a good chance that it'll bounce. But wait for confirmation to make any decision either way, and don't leave yourself in a position where you're going to be forced to hold the bag. If you see the price breaking down, act accordingly. Either buy puts if you refuse to sell your shares, buy some puts. That way you can protect yourself. You can exercise the puts and then immediately take that money and purchase shares at market price. So if you buy puts here at 650, you exercise them while the price comes down to like $4 or something. I'm just making up numbers. But if it comes down to $4, you exercise those puts, you sell your shares back at that 650, and then you buy those shares with that money back at $4. And that way you get more shares, or the same amount of shares if you just want to, keep it as flat position, whatever. But that's what you should do in situations where you see the price moving against you. So just be careful. But look for this close. Look for that green close above that pennant. Okay, so back to the discussion that we were having on the overall market. We were talking about the 2008 crash, but yeah, anyway. So where we had left off was that inflation was rising. The stock market was starting to go down and down and down. And there was a huge problem with the financial crisis because all the banks were way over leveraged, and they backed themselves into a corner because all of their CDSs that they owed people were starting to come due. So again, you should watch my video that I released this morning if you want to get more information on it. I'm not going to go through all the same level of detail that I did in that, but the point is that what eventually caused this crash was a liquidity crisis. Sorry about that, guys. I just ripped my microphone off of my head. Okay, so right, so what caused this crash was basically a major liquidity crisis. Quick mic check before I go on. Everybody can hear me? Can I get some confirmation from Discord?
Absolutely.
I can hear.
Okay.
Confirmation bias.
These indicators confirm all of my biases. Okay. So, like I was saying, The 2008 crash that like this move down here, this was caused by a major liquidity crunch. Without going into too much detail, basically what was happening was because of all those MBSs that I had mentioned were all filled with bad loans, the CDOs that they had been packaged into were also failing badly. The thing is that the CDOs were so dense and so badly constructed as devices that the banks themselves didn't understand how they were failing, and they didn't know how to get the money together to pay their investors. And the way a CDS works is there's layers or tranches, groups of loans that are paid out to certain specific investors. There's the senior block, that's the most that's the highest block on the CDO. That's the group of investors like pension funds, people that have to be very, very safe. So the top block or the senior tranche of the CDO is rated AAA, or they structure it so that it can be rated AAA. And those investors in the senior tranche are paid out at like something like a 1% rate of return, and they get paid first no matter what happens, as long as the CDO or the bonds don't fail completely. And then there's a mezzanine or the middle tranche that gets paid out to loan. It's mainly the loan officers, the lending banks, those banks that invest the money on behalf of the mortgagers that they're servicing, which is a huge conflict of interest, by the way. But they get paid out. They get paid second. They get paid after the senior tranche, and they get paid at a slightly higher rate of return to compensate them for their patience. And then you have the junior tranche, which is the lowest level. They get paid absolutely the last at a variable rate of return, depending on how many of those loans were paid. Now, as long as everybody makes their payments on their house, then everybody gets paid. And the senior notes, the pension funds, they get their 1% rate of return. They're happy. The mezzanine, they get their 3% return. And the hedge funds that bought the riskier one in the junior tranche, they get paid at like a 5 or 6% rate of return, and they're really happy. Now, the thing is that they can insure those with credit default swaps, and that's the device that Michael Burry bought when he saw this thing going badly. And it's like an insurance policy. If the bond fails, then the entire value of the bond, the CDO, gets paid out to the insuree. So what happened was the banks were originally only selling CDSs, or you had insurance groups like AIG that were selling CDSs to people like the pension funds who were like, this CDO still seems too risky. I want to buy an insurance policy. So they go to AIG, and AIG is like, sure, we'll insure that bond, and then we'll give you all of your payments if they fail, but you have to pay us a premium insurance payment every single month. And that's fine with the pension fund because they're still getting returns, and they keep getting their money. And it's more money than what they're spending on insuring the bonds, so they're cool with that. But what AIG was allowed to do, and a lot of the other banks like Goldman Sachs and Merrill Lynch and Morgan Stanley, all those big banks, they started selling CDSs to anyone who wanted them, and that was really fucking stupid, because what happens is you have you have a single bond, right? That the bond pays out over the course of a length of time, something like $2 billion. But if the bond fails and you have 10 people insuring that same bond for $2 billion, then guess the fuck what? Each one of those entities is entitled to their $2 billion because the bond failed. So what happened was a single bond failed, and it caused a $2 billion loss to become a $20 billion loss. And that's when it gets nuts. So that's what happened. And it happened across the entire market. So all those credit default swaps, this is why Warren Buffett called it the weapon of financial mass destruction. So anyway, that happened in September, and then it collapsed everything, and all the banks failed in October. By October, more than more than 20 separate banks had gone belly up, including two big ones, Bear Stearns and Lehman Brothers. So that was the worst situation that we had ever experienced. Now we've got a whole different situation going on here with our latest market, and it's going to create an issue. But the point is that you could have seen it coming. And that's what I want people to take note of here, is that we have a different kind of crash that's happening for different reasons, but it's still nonetheless going to be a catastrophic situation. So hence, I'm going to take some time to go over it with y'all, but I have to go in 15 minutes, so I got to make it quick. So we've got multiple phases in the phase of a crash where we have volume that is acting as support. This is basically traded volume, all the volume that was traded in the SPY up until today for the last, I don't know, like 2 years. If we go all the way back in time, we see that there's this huge base of support down here below us. This is before the COVID crash. This is before the recovery and everything like that. All of that volume, if I was to draw it from 2016 all the way up to the peak where the SPY had gotten to its highest point, we see that there's this big red line here. All this support where all this volume was traded is right here. This is where the biggest amount of volume is. So this is a significant area of support right here between $260 and $300. But up here, there's hardly any volume. That's because the SPY was pumping with so many people buying and pushing the price up so rapidly that they never established support in these areas. And now we're retesting these levels. We're retesting this level that was the highest area of support at the time. And that's a dangerous fucking thing. If we break down below this 380 level, $380 level, there's nothing here to catch us. There's all air between here and the ground. And that's what I'm trying to point out to people, is that we have a serious situation where there's no support in the charts. Psychologically speaking, you got all these buyers up here, all these bag holders that are still in their positions. And I bet you a lot of them are institutions. They're probably sitting up there freaking out, and they're trying to push the SPY back up so they can get out of their positions. There's a lot of money that's trapped up here. So you've got institutional bag holders that are waiting to dump on retail, and they're going to do it. Notice that all of a sudden, when the market was at its worst performance this has been the worst January for the SPY since 2008. This is serious. This is serious. We have had a 15% move to the downside. That's a significant drop, 16%. Now, we made a 5% push, but the same thing happened in 2008 when the market rallied. And the thing is it's all bullshit. This is being perpetuated by just a whole load of propaganda. And god damn this fucking bot. Get out of here. Get out of my channel. Get out. Go. 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 Bad. Piss off. God. All right, anyway. So we're retesting these same levels right now. We've had a huge 15, 16% move to the downside, and the market is continuously retesting and breaking its previous levels of support. Now, we have other things going on here. We have another housing bubble, and I want everybody to understand that houses make up for the biggest. This is the largest sum of American consumer debt. It is in real estate. Out of our entire debt, our whole national debt, 25% of it is in real estate loans. That includes agency loans, that's government originated or insured, that's federally backed loans, and $2.7 trillion of that, that's like somewhere between 20 and 30% of the total mortgage-backed securities and loans are held on the Fed's balance sheet, and they are getting ready to dump them. They are trying to sell it back to the institutions that they reverse repoed. The government bought those bonds on reverse repo agreements, saying that the institutions would be forced to buy back the bonds whenever the Fed said so. Now the institutions are getting freaked out because they realize the market's down against them. They didn't sell all of their shit, and now they're in a bad situation because they've got money trapped up here. They need to get that money. They need to get their cash out so they can deliver it to buy back those bonds. Otherwise, they're going to take a huge fucking loss. They're trying to push into this area, this big zone of resistance, and they are waiting to dump these shares on people. When it gets here, there is going to be a retrace. There is going to be a strong retrace. We might get up to 430. We might, but there's no way we're going back up to all-time highs. It's not happening, and I'm going to tell you why. We have a serious housing crisis going on right now. The housing shortage has been proven to be bullshit. Come on. Monthly supply of houses in the United States. This is measured in months of supply. I want to illustrate this against the housing supply back in 2008 when the market tanked. This little blip here, this is 2008, the worst financial crisis that we've ever had. This is what the housing supply was like when it had finally tipped the scales. This was the top of the SPY in July of 2007, when the SPY was almost at its peak. That is 9 months of supply. We just broke up through 9 months of supply 2 weeks ago. And it only took us 3 months from our lows. Let me go ahead and hide some of this stuff. It's getting hard to see. Pay very close attention to this. This is our monthly housing supply. During the COVID period, this is where the housing supply was because everybody yanked their houses off the market, but those houses didn't go anywhere. They still existed. They're still in the hands of people that were trying to get out. Over time, we had a whole bunch of construction that built a fuck ton of houses and added to the inventory, and there was a whole bunch of homes built on spec by home builders that were expecting buyers to come. But now I've been tracking weekly the inventory levels, the sales, and the listing prices. Here is the facts. Every single week in all major metropolitan areas, especially the ones that are overbought in Boise, Idaho, Portland, Oregon, San Diego, California, Sacramento, Phoenix, Arizona, Tucson, Arizona, Florida, Houston, Texas, Austin, Texas, all these big major metropolitan areas, especially ones with heavy tech businesses, are and oil, tech and oil are all these major metropolitan areas are having a surge of inventory in houses because people are FOMOing out of the market, trying to get the hell out of their houses. The interest rates are rising, which is preventing people from qualifying for mortgages, and the listing prices for houses are rapidly declining from their all-time highs. Our latest median price was almost $500,000 for a house, and it's coming down fast. We're going to get the numbers in just about 15 days or so, 15, 20 days. It's not going to take very long for people to realize once they get that data published that, oh shit, the market's turned around and people are going to try to get out of their houses. What that's going to do to the stock market is it's going to devalue all of the holdings for BlackRock, Vanguard, and Blackstone, those motherfuckers that bought up all of those houses on cash and took them out of the market. So there's a serious situation here. This housing crash is going to cause other things to happen. like mortgage-backed securities losing their value. When these mortgage-backed securities get dumped by the Fed in order to recover their balance sheet, it's going to result in a bunch of banks holding on to these mortgage-backed securities and all of these agency MBS that they know are going to lose value. Now they're trying to reshuffle all of their investments, get to cash quickly so that they can buy those MBS from the Fed now and then dump them on someone else as fast as possible because they need to move it quickly. It's going to cause mortgage-backed security value to plummet fast. And the housing crisis is going to determine how fast it happens. If the housing value drops before the banks can get out of their mortgage-backed securities, then they are going to lose all of their equity. They're going to lose tons of equity. Big banks that I'm talking about, Bank of America, Wells Fargo, JP Morgan Chase, all three of these banks are holding on to a majority of mortgage-backed securities that they added to the Fed's balance sheet. They're going to have to buy those back. They are contractually obligated. They must buy those back. They need to get to cash quickly so that they can buy them back now and dump them on someone else because they do not want to be holding that shit. Right now, what the market is doing is allowing them to get out of their stock positions. If it can get back up above $430, they will be back into an area where they can sell. And they can still take some cash out of the market. This is why I want people to be very, 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 very fucking careful. This is a serious, serious problem. I'm not trying to scare people, but like we really are in a seriously bad situation. We are in fucking trouble. Because right now, the Fed is in a position where they need to get rid of their balance sheet. And they need to get inflation under control at the same time. And job losses are going to create a problem for us. We really could be seeing like a 1970s era stagflation period in our future, combined with a housing crash. Both of those, one of those things by themselves would be bad enough, but we could survive it. But both together, I don't think so. I think that it will actually put the country on the verge of bankruptcy. This is really serious. And I want people to go and investigate this for themselves and go seek out this information, because I don't want you to just listen to me. I don't want you to just take my word for it. I want people to go out and investigate this on their own, because this is a very serious problem. Inflation is going to hurt really bad. This is the record highest inflation we've had since 1970, back when it reached up to I think it was 15% at the high water mark. But the problem is that the CPI index then doesn't, it's totally inaccurate now. Our CPI index is underestimating our inflation so badly that our inflation may already be at 15% compared to what we used to be rating it against back in the 70s, because now we have tech, and the CPI index does not account for real estate. That's right. Real estate, housing, commercial, or residential doesn't get counted into the CPI index. And that is our largest source of equity in this entire country. What is the ticker for the housing supply? You have to go to Fred, but if you have TradingView, you can go to MSACSR. That's this ticker. Yeah, what's up, my dude?
I was going to say, don't they pick and choose the CPI, like what they're using to gauge it, different every single time they put out new numbers?
Yes, they selectively choose commodities and sectors
they can make
to
it look
determine
whatever they want.
Yes. Yeah. I know that people are like, if you're in a home and you're happy in your home, like, you're going to be fine. Okay. Like, as long as you are not trapped in your house, as long as you're not like upside down in your mortgage, you have a great fixed mortgage rate, and you have equity in your home, then you're fine. Like, I don't want this to scare people into like, oh God, yeah, everybody sell their house now. No, I'm not saying that. But if you are in a situation where it's like, if my interest rates go up and I just bought my house, you need to understand what can happen. Like if you just bought a house, you are at risk because the interest rates are rising rapidly and the value of housing in your neighborhood is going to decline when this happens. All right, I am unfortunately all out of time. I have to bail out to go and catch a meeting. I'm sorry to cut this off so abruptly, but I really want to tell you guys I appreciate you for stopping by to come and watch and listen to me ramble. Please look into this for yourself, okay? And be ready for the SPY to start tanking and turning around. The point of no return is $380. If it crashes below this, we're coming down, and we're coming down hard. That's my thesis. Don't take my word for it. Go investigate on your own. All right, guys. I will talk to you later. Peace out.